Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, General Motors and Ford, man, they have led a rally across automakers after U.S. Commerce Secretary Howard Lutnick had initially teased an update related to the trade standoff between the U.S., Canada, and Mexico. And we've had headlines since showing that we will see some kind of rollback, it seems, when it comes to tariffs. So watching that go on and play out, and we have seen, as I mentioned, those two names go higher. Tesla right now is up about 1.6% as well. But that's today because the stock is down a lot, in fact, from its high back in mid-December, down roughly 40% since then, giving back much of its 90% gain since that November election here in the United States. And today, a bunch of headlines about the company, the EV maker offering up some perks to drum up sales, and we'll explain why maybe they are looking to do that because they've had some disappointing sales numbers, Tim. We'll get into that in just a moment.
Okay, well, here to go through the flurry of headlines on Tesla today is Bloomberg News senior technology reporter and a contributor to the Elon Inc. podcast, Dana Hull. She joins us from San Francisco. Deanna, some of the headlines that Carol mentioned, in addition to those, Tesla sales plunged 76% in Germany last month. China sales slumped in February to the lowest monthly figure in more than 2.5 years. President Trump pulling the plug on support for EV subsidies. And then there's the perks that Tesla is now offering up to drive sales. How is Tesla's business doing?
So the core business, I guess big picture, the first quarter is typically slow for Tesla. They had a very strong fourth quarter. First quarter is always sort of slow for them, but you are definitely seeing a lot of backlash against the brand because of Elon Musk and his politics, particularly in regions where he has been very vocal. So, for example, in the U.S., he spoke at inauguration. Tesla sales in the U.S. are not doing so great. You've seen protests at Tesla showrooms across the country. In Germany, where Musk got very involved vocally in the German elections, you're also seeing a bit of a backlash there. And, the proof will just really be in early August when we actually get first quarter sales. But I would note that Tesla also has a kind of older lineup. And even though they are in the process of refreshing the Model Y, the cars are not particularly new and the Cybertruck is not doing super great. So all of these things are weighing on sales.
I thought the Cybertruck was doing pretty well.
I mean, it's doing okay. It's just not like F-150, level sales.
Yeah.
And I think also economic anxiety, like a car is a huge purchase. Right now we have, interest rates are still high. A lot of people are losing their jobs. People are worried about the economy in general. You're seeing a lot of, it's too early to say, but typically people pull back on making big purchases when they're worried. And that's going to impact the auto industry as a whole.
Hey, Dana, remind us in terms of Tesla, where most of the revenues come. It's the U.S. market. And is that where the growth is, or is the growth? Yeah, go ahead.
Yeah. The U.S. has always been the strongest market, followed by China, and then other international markets are roughly a third. And you're seeing Tesla is definitely always entering new markets. Their global footprint continues to expand, but their brand is mostly well known here in the U.S. and in China.
At what point do shareholders at Tesla, and look, it still had an amazing run, especially over the last year, we were just showing the chart there. At what point, though, do shareholders say, okay, Elon, enough time in Washington, D.C., it's time to go back to Texas or to go to Fremont or to go wherever and focus on Tesla?
I mean, this has been a perennial problem with Tesla for a long time, right? Like Tesla shareholders have always fought to have Musk's full attention. When he bought Twitter, Tesla shareholders were very upset about that. But Elon is going to do what he wants to do. The board has been completely silent. And unless the board makes a move or big institutional shareholders really raise a ruckus, it's hard for me to see that anything is going to change. At some point, you could presume that the shares would fall low enough that Elon would kind of wake up and refocus his attention. But he is very squarely in Washington. He's in Washington today. And, the company, so is anyone's guess as to what would shake him into action.
Yeah, I keep thinking about that. And I did, was taking a look at some of the major holders. He, of course, is the biggest holder, right, of Tesla's stock. But it's in a lot of index funds. We all own Tesla, right? Because it's just such a massive company, and it's owned by, as you said, a lot of the big institutional investors. At the same time, you say, he does continue to expand. I was reading something about signing a 5-year lease, Tesla that is, for its first India showroom. What's the potential of this market for Tesla?
I think, obviously, India is a growing economy.
Mm-hmm.
It would be great to have a foothold there. The real competition that Tesla faces globally is with BYD in China.
Mm-hmm.
So anything that Tesla can do to kind of grow its brand and its footprint in India would be a hedge against China's influence. But I think that you're seeing, BYD is expanding globally also, and Tesla just doesn't have the kind of product pipeline with a really new electric car or that lower cost vehicle that everyone is waiting for. And to be clear, the market is still very confused. Is Tesla coming out with a $25,000 car, or is it just a cheaper version of the existing Model Y and 3, or is it the robotaxi? And investors are very eager to hear what is actually next. But Musk is not even really tweeting about Tesla all that much. His posts are largely about Doge. And but this has been the sort of catch-22 that Tesla shareholders have been in for a long time.
This is somebody you followed for years. I don't want to say you know him well, Dan. I'm not going to go there, but you do know what he does very well. You know his patterns very well and the way he works. If you think about what he did during the Model 3 development at Tesla's headquarters, sleeping on the floor there, he did the same thing when he bought Twitter a few years ago. He moved a cot into headquarters there. We've heard he's doing that or has done that at Doge. He sort of seems to be really intense and then sort of move on to the next thing. Do you think he'll move on from Doge?
I think at some point he might lose interest. This is clearly where his focus is right now, but he has a lot of demands on his time. He's overseeing 6 companies. He's clearly very interested in Starship and the next Starship launch. When it comes to Tesla, my sense of him is that he's sort of bored of just the car business in general. He sees the future of the company as being on AI, robotics, and the robotaxi. We reported exclusively last week that Tesla has applied for a permit in California to begin some kind of ride-hailing service where they would oversee the fleet. It's not a robotaxi yet because they don't have approval to actually operate a robotaxi, but they are making moves to get into the ride-hailing business in California. And so, he hasn't completely given up the reins. It's just it's just wild, as always, that you have a company as large as Tesla with so many thousands of employees, and they don't have a full-time CEO, and they don't have a clear number 2.
Yeah, I was going to ask you that, who's the number 2? But, I look at the DES page, the description page on the Bloomberg, and he's the CEO, Elon Musk, right? And so it is interesting to see him spread, as he often is, along so many different things. Dana, thanks so much. Shedding some light, a lot of light on Tesla on this Wednesday. Bloomberg News senior technology reporter, contributor to the Elon Inc. podcast.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, let's get to it. Let's get more on those Fed Beige Book headlines that just crossed the Bloomberg terminal. We also had a ADP jobs report earlier today, showed a slowdown in the U.S. labor market. So rolling it all together, as we like to do with our Mike McKee. He's Bloomberg News International Economics and Policy Correspondent right here in studio. Yes?
I'm smiling because I'm reading the summary of the Beige Book, and if there were 3 words that would describe the Trump administration policies right now, I think they would be tariffs, immigration, and eggs. All 3 make it into the Beige Book.
Seriously.
You mentioned overall activity rising slightly. That's sort of the headline word, with 6 districts reporting no change, 4 reporting modest or moderate growth, and 2 noting slight contractions. Consumer spending lower on balance. We've seen some data to that effect, although they do attribute a little bit of it to unusually bad weather. Manufacturing, slight to modest increases, but the part that caught my eye was some contacts in the construction sector expressed nervousness around the impact of potential tariffs on the price of lumber and other materials. So that does make it into the comments that businesses are giving to the Fed. Labor markets slightly higher on balance. Many districts citing job growth in healthcare and finance, which is unusual because today we saw ADP report big decline in healthcare hiring. So not sure what sense that makes. Contacts in multiple districts also said rising uncertainty over immigration and other matters influencing current and future labor demand. So
those are sentiment kind of things, right?
Yeah, well, this is basically sort of the anecdotal backup to the statistics. And then let me just talk about prices increasing moderately in most districts. Many districts noted that higher prices for eggs and other food ingredients were impacting food processors and restaurants. So people are, all these things that we laugh about, people are feeling out there.
I have to say, I didn't even know, because I know people here at work have said $12 to $13 a dozen. I said, honey, what are we paying for eggs? He's like, $7 a dozen.
Oh, I got to come to New Jersy and get my eggs, I guess.
They're on sale.
I guess that's what it is.
I got 18 for $8 about a week ago.
Sounds like a Wegmans deal. That's what I hear.
A dozen and a half?
No, I hear 18 at Wegmans is the way to go. But
well, you grab 18 when you can.
Yeah. Okay. Hey, Mike, speaking of eggs, I do see it mentioned 4 times in the Beige Book, in this current Beige Book. When you see something like that, give us some context as to like when the surveys were taken so we can have an understanding of timing, because a lot has changed in a very short time.
Well, the Fed puts basically surveys the in-between period, the period in between meetings. And in this case, what they're saying is the report was information on or before February 24th. And that was right at the height of the there are no eggs concerns. So it's relatively timely here. The thing about eggs, of course, is that it's because of bird flu. Right. So interest rates aren't going to fix that problem one way or another, but it does show the psyche of what people are thinking.
Interest rates aren't going to fix lumber prices either.
No. Although they could have an effect on housing, but they're not going to make lumber any cheaper. And that was one of the things when I was down at the NABE, National Association for Business Economics meeting on Monday. People were talking about commodity prices going up, particularly lumber, because there was a whole session on how do we ease the crisis in housing. Right. And the concerns were that you need to build more homes, but if the price is going up a lot, then people aren't going to be buying them anyway, even if interest rates come down.
Right. If you build them, they won't come if they're unaffordable. Right. Yeah. Hey, listen, one thing I want to ask you before we get into kind of a bigger story about the U.S. economy is the ADP jobs report. Hiring at U.S. companies slowing in February, the lowest pace since July. What do we need to know?
It's a kind of a weird report. Okay. We don't know exactly whether you never know with ADP whether it is giving you a good read or not. But the interesting things about it were that we've heard bad things about manufacturing, and manufacturing gained 18,000 jobs. We haven't seen anything like that in a long time. Huh. How bad was the weather? Everybody talks about the weather effects on all the data. Well, construction went up by 26,000 jobs. How does this happen? Service industries were the weak part of the report instead of the manufacturing side. As I said, health and education, which is usually the biggest job creator in the country, lost a lot of jobs. So I'm not sure how much stock people are going to put in ADP this month.
Does it? Well, I mean, I guess we'll find out on Friday if it actually gave us some sort of read through to Friday.
Yeah.
Does it? Can it?
It usually does not. Sometimes it gives you a direction, but the magnitudes are never anything near, which, and they claim we're not supposed to be predicting. This is just what ADP found.
All right. So we've talked to you about the recent flow of U.S. data, and we've talked about weakness, consumer sentiment, consumer spending. We did talk about the U.S. Manufacturing data that was recently weak. It's also a topic that came up this morning on Bloomberg Surveillance. They hosted the U.S. Commerce Secretary, Howard Lutnick. We wanted to play a little bit of the conversation between the Secretary and Surveillance co-host Jonathan Ferro on the recent signs of a U.S. slowdown. So listen up, everybody.
You're looking at data that's Biden data. Do not try to besmirch my President Trump with Biden's nonsense.
You think the ISM manufacturing number is Biden data? I just want to be very clear. That's your opinion. You're entitled to it. You think that's his data and not yours?
Of course it's my opinion.
Okay.
What possible could change? Seriously, we are in early March. My president took over January 20th. You think economic data coming out in early March is Donald Trump related data?
Monthly survey data?
You gotta be kidding me.
Mr. Secretary,
Stop it.
All right, of course, U.S. Commerce Secretary Howard Lutnick with Bloomberg's Jonathan Farrow earlier on Bloomberg Surveillance. So the Biden economy versus the Trump economy, is the Commerce Secretary fair to say that this isn't yet indicative of policies coming out of the Trump White House?
Yeah, give Howard credit on one side and ding him on the other side, because it is largely still the Biden economy. Trump only took over on the 20th of January, and the data we're getting is largely from January, although the ISM numbers that we got this week are for February, and he was president during February. But the part where Secretary Lutnick is completely wrong is that Biden, when he says Biden left us a mess of an economy, the economy was very strong. So, it's politics.
Everything is politics, Mike. It seems like.
And politics is applesauce. I think that was Will Rogers.
but let's try to cut through that a little bit. Is there a certain point with certain data where this can become Trump's economy? Like, when can we start saying that?
It's really psychological. It's when do voters start associating the president with the economy? There's always a debate when we do those tables that say, how many jobs were created under the Biden administration versus the Trump administration versus the Bush administration, because they take over on the 20th of January. So and the survey for January payrolls is taken before that. So there's always an argument. Well, do you include January in the previous presidents, or you just start with a calendar year, whatever? None of that really matters. Once you get to the February data, which we're getting into now, you can argue that's the current president because he's the president. But the thing is, presidents always get credit for things that go right in the economy, even though they probably had very little to do with it. And conversely, they get the blame for things that go badly, even if they had nothing to do with it.
There's also lags in policy, so there can be policy from a previous president that you don't really see the results of.
That's the little bit the harder thing.
Yeah.
When a lot of presidents pass some measures to increase hiring during their terms, and then you see a bump in hiring, and that you can definitely attribute to them. But it's really a vibe, to use a word that people have used a lot about the economy these days.
Inflation. I know we've talked about it ad nauseum with you, but I want to go back there, because regarding the inflation during the Biden economy, exactly what caused it and why it's still been sticky. Because I think there is a blame game that goes around. There was a lot of money sloshing around coming off the pandemic, and had a lot of money chasing stuff that certainly put pressure, and there were supply chains disrupted. Is that, so help me understand, when we're kind of finger pointing when it comes to inflation today, who's responsible and what really gets us out of it?
Probably the people who are responsible are the people who are sitting in the C-suites of companies deciding what to charge. Because at this point, yes, we had a lot of extra money go into the economy. And yes, we had massive supply chain disruptions. And the economic literature studies basically put most of the blame on the supply chain disruptions, which caused companies to raise prices. But this is an argument about supply versus demand that is going to go on and on and on. Both sides have arguments to make. But we've gotten down to the 3% level, and it's that last mile that's very difficult. And that's because we have some unusual or individual categories that may have a bigger weight than others, like used cars and certainly housing, that have not performed as you would expect. You would think that house prices would go down, but because we had this unusual period of very low interest rates, and everybody locked in at low interest rates, and they don't want to sell. And then you've got a problem with not enough new homes being built, because there's a lot of problems at the local level of zoning and things like that. So all these things contribute, and it's not something that the president, put it that way, or the Fed chairman can solve.
Well, the president, those policies, many would argue, can affect the inflationary environment. Tariffs, for example. You do have some economists coming out, many economists saying that tariffs on goods from Canada and from Mexico, and China would.
John
be
Williams
inflationary.
Yesterday, the New York Fed president.
Who did he say that to? Mike McKee. Was that you? You said that to?
Somebody I know. Really good-looking guy.
Modest too.
Well, tariffs are inflationary. We know that. The question is, do they just push up price levels once, or do they keep going up? And that was the point that Williams was making. Is we know that the price level will rise, but we don't know whether it will continue, because Trump has talked about so many different tariffs coming on at many different times that if that happens, then you could have an inflation problem, and then you might get an inflation psychology where companies are saying, well, I keep having to pay more, so I'm going to raise my prices to meet this. If it's a one-time move, maybe they don't. So that's the hard part about knowing whether this is going to contribute or not. It'll contribute something, but is it something that really underpins inflation going forward?
All right. Great stuff. Thank you so much. Really appreciate it. And should point out, if you missed the John Williams conversation with Mike yesterday from Bloomberg Invest, worth checking it out. It's on the Bloomberg terminal. It's also at Bloomberg.com. Some really great views in terms of the U.S. economy and Fed policy. Thank you, Mike. Bloomberg News International Economics and Policy Correspondent Michael McKee right here in studio.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Greenland. It was mentioned last night during President Trump's, address to the joint session of Congress. Not, of course, the first time that he has talked about it and about gaining control of the territory. This vast, isolated land finds itself thrust into the middle of the global security debate. This as Greenland faces another election, and one that, again, as it has for virtually every election for almost half a century, is about seeking and promising independence from Denmark.
And yet, this year, because of the interest by the U.S. president, independence takes on much more importance. We decided it was time to really dig into the history of Greenland and understand more about why we're talking about it so much. To do that, we head to Berlin and to Bloomberg Businessweek Europe editor David Rocks. David, Greenland, why are we talking about it so much?
Well, because of Trump. I mean, nobody had been thought much about Greenland other than Greenlanders, of course, for, the better part of 50 years. And all of a sudden, Trump started talking about it, in his first term a little bit, but more recently in the past 6 months or so. And everybody wants to know what's going on in Greenland.
Well, and I have to say, I think it's fair to say, David, that everybody's like, Greenland, country, territory, who owns it, who oversees it? Like, what's the political history that we need to kind of understand about Greenland and really right now and for the last 300 years, its relationship with Denmark?
So it's a territory. It is not a country. It is controlled by Denmark. It has been for about 3 centuries since some Danish missionaries moved in there, about 300 years ago. But they've been relatively independent. In 1979, they were given control of some domestic issues. And then since 2009, they've had the right to oversee almost everything except for defense and foreign policy, although they don't actually do everything that they have the right to do because there's only like 50,000 people there, right?
Yeah, it's a very sparsely inhabited place. In recent years, though, Greenland's relationship with Denmark has really become strained. Why is that?
Well, because people in Greenland feel that they don't get the respect that they deserve. There's still reports of some degree of kind of Danish people looking down at Greenlanders. And there's been fairly recent reports of things like forced sterilization and putting Greenland kids into schools that they, taken away from their families and putting into boarding schools. The whole kind of things that have happened in the U.S. and Canada to native populations have happened in Greenland. And so people there are not super happy with Denmark.
There's a question about independence, and there's also certainly the U.S. question. How, in the upcoming election, what's the conversation happening about independence, and how has it taken on sort of a new importance given what we've heard from President Trump?
Well, all right. So I guess it's virtually certain that the winner of the election will be a pro-independence party because all of the major parties are pro-independence. So there's gonna be a pro-independence party, whoever it is, running the place after the election on March 11th. But that said, the population generally is pro-independence, but they're not pro being taken over by the U.S. They want to be Greenlanders.
All right, so let's roll in the U.S. aspect. The U.S. has had military base or a military base there, right? So there has been a
certainly since the 70s, 80s, when I was growing up, it was a big deal back then. You know, I can't remember exactly when it started, but it's been around for a long time, decades and decades. And it's what it is it's a place where there's a lot of technological infrastructure, radar and things like that, you know, back when we were really worried about the Soviets, you know, sending missiles across, Greenland was going to be the place where they would be spotted first, as it were, Greenland and northern Canada.
Well, and I have to say, all of us talking about Greenland has made us roll out our maps or, you know, pull them up on our phones. Having said that, so why did we did this in the introduction about the importance of the outcome of this election and why it means so much for global national security. So play off of kind of, you know, where Greenland is and why it is maybe such a necessary territory, or at least that's why President Trump says the U.S. should have it.
Yeah, I mean, necessary territory for the U.S., I'd say that's highly questionable, but a strategic location, no doubt. Greenland is it sits kind of right between the Arctic and the North Atlantic. It's a place where, you know, if Russian warships wanted to head toward the U.S., I guess they'd probably have to go past Greenland. You know, and will that ever happen? Highly unlikely, but that is a consideration. But then also there's a lot of mineral wealth there. And so it's not just sort of, you know, security in the way that, you know, we want to protect ourselves from whatever our perceived enemies might be, but rather, you know, to have access to the kind of mineral wealth, particularly rare earths and things like that are needed for electric cars.
So we have strategic shipping routes, an importance when it comes to defense from a United States perspective, and then the minerals that you mentioned. David, realistically, is Greenland becoming part of the United States something that could even happen?
You don't want to listen to me predict what's going to happen because I never would have predicted that we'd be where we are right now. But, you know, Greenlanders don't want it. They want independence. They don't want to be Americans. And what independence would look like is not something that they particularly want to say. You know, a lot of people there think, well, okay, we want to be independent, but we want to still have close ties to Denmark. So, you know, will it happen? You know, a fully independent Greenland, let's just say, would be far more susceptible to U.S. influence than a Greenland that sits under Denmark, which some people in Greenland actually recognize or would say.
David, I am curious too about what Denmark says in all of this, or what they've continued to say, and the importance of, they obviously provide financial support to Greenland. Can Greenland support on its own, survive on its own, exist on its own without some kind of financial support from someone?
I mean, certainly right now it would not appear that they can. I mean, you know, the economy is, the vast majority of economic output is basically fishing, right? And so they don't have a particularly strong or dynamic economy. They've got a lot of mineral wealth. They sit in a place, you know, people sort of want to control them, but it doesn't create a lot of cash flow right now. So yeah, Denmark subsidizes Greenland to a huge extent. Denmark has, you know, over the decades, they've been pretty anti the idea of independence. But the political leadership in Denmark is starting to come around to okay, maybe we can sort of create some sort of middle ground, more independent than they are now, but we want to be the country that helps support them. We don't want them to become part of the U.S.
So what you're saying is the end game here could be, in effect, really good for Greenland because they're getting so much attention, and perhaps they're getting the attention of Denmark?
Yeah, chances are they'll get more attention from Denmark and, by extension, the rest of Europe. But that said, they're getting a lot of attention, but it may not really be the attention they really, really want.
One thing I am curious too, because we are talking a lot lately, certainly with this administration, about mineral rights. And rare earth minerals and the like, whether it's Ukraine, whether it's Greenland. This story on the Bloomberg, gets into various mining projects. They note at least 4 mining projects have been halted since 2010 following questions about their environmental and financial costs. So what is the likelihood that, these rare earth minerals are actually unearthed? I mean, does climate change make it potentially more easier, accessible, viable? Yeah. And how wealthy is this deposit or these deposits?
So Greenland is, the vast majority of it, I can't remember, is 90%, 95%, 98% is covered in ice, and ice that's miles thick. Okay. So you're not going to get to what's underneath that ice very easily. Obviously, that ice sheet is melting, and it's melting faster than we really want, but those are the facts. And so as the ice sheet melts, more earth with minerals underneath it is becoming accessible. How accessible is that? And would Greenland really want that? That remains unclear because there's been some environmental pushback in Greenland to mining projects. You said that these 4 mining projects have been canceled. That's been, at least a couple of them have been on environmental grounds. So you can't count on everybody in Greenland saying, yeah, just dig, baby, dig.
Well, the reason we got to speak to David this afternoon is because there is this great story in Bloomberg Businessweek. Sen Was and Sarah Solon went to Greenland and got to experience the area, but also talk to folks there. I do encourage everybody to check out the story on the Bloomberg terminal. It is in Bloomberg Businessweek.
David, thank you so much. We've been dying to do this in this deep dive. So thank you. David rocks, Bloomberg Businessweek Europe editor, staying up late for us out there in Berlin. So appreciate it, and do highly recommend you check it out on the Bloomberg and at Bloomberg.com.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
The story from our Bloomberg News team earlier this week getting our attention. At business schools across the U.S., graduation fast approaching. The mood, though, subdued. MBA programs that once offered a glide path to lucrative jobs are finding fewer and fewer seats on Wall Street and in corporate America for their graduates. At every one of the nation's top schools, known as the Mag 7. I didn't know this. They were known as the Mag 7.
I didn't either.
Job placement outcomes have declined since 2021, and this year is looking no better. No joke, Carol. You can attest to this. As I was writing this intro, I got an email from Dean McGlaris at Columbia Business School.
Right. You're a grad of the Columbia Business School.
The subject says, hire CBS. And it's like an email talking about recruiting.
All right. So that is the view from schools inside the United States. Let's go outside the U.S. to France. We've got Emmanuel Metais, Dean of the French Business School, EDHEC Business School, with us, as well as Dimitra Kessenides, Bloomberg News senior editor. She spearheads our global business school coverage, I should say, for Bloomberg Businessweek. And they're both here in our Bloomberg Interactive Broker studio. Welcome. Nice to have you here. Hello. Dean Metais. Before we get going, we want to ask you about what you are hearing and seeing from other business school deans during your visit here to the United States and other business schools. How much is the job market a topic right now?
What is striking here is, as always, the power of the higher education institutions, their entrepreneurial spirit, the amount of resources that they have to reach their ambitions. But also I could feel some kind of anxiety about, research funding, about the capacity of welcoming foreign students, foreign researchers, foreign professors. So I could feel that it was kind of mixed feelings, as always, and I mean the best educational system in the world, especially for business. But at the same time, some caution about tomorrow. Uncertainty about tomorrow.
I know, I don't want to use the term frenemies, but you are also competitive with these schools. Is this only good news for you? If there's an environment in the United States that's not as conducive to attracting foreign students, foreign professors, is it just great news for you in France?
No, but I mean, bad news for the US is bad news for us. And of course, if I was really egoistic, I would say, yes, it's good news for us. We will have more foreign students coming to us, and probably will have opportunity to recruit talented professors and researchers from the US market. But no, I think it's not good news, because we tend to see us in a very global market, in a very global higher education system. And we see more and more countries, turning onto themselves. Not only the US, the UK, Canada, you name them, Scandinavian countries. And they want less and less immigration, and including foreign students. And it's not good news at all. I visit a lot of countries all around the world, and what we can see is that when there is a country which, try to decrease immigration, and especially student immigration, it's a disaster for the country and for the schools.
Wow. Yeah, that's not surprising. And I think I'm hearing very much the same from other people that we're talking to. I think it's of great concern because of just the points that Dean Metais is making. And I think there is a big concern. Sometimes we think, it's a problem for students in terms of the immigration challenges that we're confronting. But I think it is a huge concern on the research and faculty front. When we've seen the shifts in education on global business schools over the last decade or 2 decades, one big thing we've noticed is a lot of talent coming to this country, to our business schools. Look at the deans of a lot of our business schools and where they've come from. Mm-hmm. So it's a challenge on many fronts. And I think that there is definitely, however openly they're just sort of airing this anxiety, there is a great deal of anxiety right now, and really just kind of wait and see, and where is this all going?
I have to say, one of the things, my daughter's just finishing up an undergraduate degree, but spent her year over in London at the London School of Economics. And it was such a great combination of US versus being overseas for a full year. The importance of partnerships for you in linking up with US business school. Talk to us a little bit about that and how important that is.
Definitely. We want our students, wherever they are from, we want them to go to the best schools all around the world. So we have here in the US, basically we have 300 partners, academic partners all around the world. Mostly for exchanges, double degrees. But we have among the 310, let's say, strategic partners, including one here in the US. So Berkeley has business school in California, with whom we have launched a joint degree for quite a large cohort of students, so a master in management. And students spend time in Paris first on EDHEC campus, and then they go to Seoul, Korea, so at SKK Business School. And then they spent 1 year at Berkeley House. And yes, the graduates from this program are, great people and find easily good positions on the job market. So this is why we are here today on the Eastern Coast to find another strategic partner.
And who is that strategic partner going to be? Who do you want that to be?
Is there a great review?
You mentioned it, so I have to ask.
So we have already partners here, of course, as you can guess, in New York, in Boston. We have a double degree agreement with the MIT. We have Pittsburgh. So we are talking to all of them, and we'll, find the best partner here just to, launch joint program to probably launch initiatives in terms of entrepreneurship, artificial intelligence. So we want to do more than just exchange, and
Dimitra, do more students, more MBA students in the United States, are we seeing that they want a program that is not just US based, and they want to have some exposure overseas?
I mean, anecdotally, we are hearing that. I don't have a lot of the data on that, but in interviewing a lot of the students in the last few months about any number of issues that we've been reaching out on, that is definitely something that they're seeing. And I think that there's probably something about what's going on in the world right now and in our country with the government and the new administration that's making students and prospective students consider, it might be that I'm not going to be working in the U.S. Maybe I will want to go work abroad. Where are the kinds of programs that are going to really position me the best? And I think that some of what Dean Metais is describing with their partnerships also is something that's seen as if you're a student that's coming out having done one of those programs, there is a competitive advantage to that.
I also think about, please jump in.
We now welcome every year something like 100 American students at EDHEC. This is
how big is your student base?
10,000.
Okay.
Coming from all over the world, so 120 countries. What they are looking for is probably a good return on investment, because of course tuition fees in France are not the same as the one in the US. Also probably lifestyle, and also something which is very important these days is that, the purpose of the school is to put business at the service of common good. And this is something maybe that these days in the US is going to be, put into question. So we have a lot of research on climate finance, on ESG, on sustainability, and this is something that they are going to still learn in Europe and in France especially, which I suspect will be a bit less the case in the US these days.
Right, that is definitely one piece of it, is this pulling away from some commitments that we see with our government right now, and that throwing into question where we saw business school students wanting to go over the last decade, wanting to do more good with what they're doing. And now suddenly you find yourself in an environment where it's like, is that going to be prioritized? Are the companies going to be prioritizing that? Like, what are the opportunities for that? So I think that the other thing I wanted to quickly touch on, Dean Metais, was you had mentioned a number of the rise in the number of American students studying now, leaving the U.S. to study business. Is there a number you can attach to that? What have you seen over the last couple of years in terms of not just specific to EDHEC, but broadly speaking?
You mean in terms of American students moving to Europe?
Yeah.
Yeah, so it's been increasing. In France, we are now welcoming, I think, 4,500 American students. Amongst 450,000 students, so it's not so many of them. I remember that 20 to 30 years ago, we barely could see American students in our schools. It's the American students wanted to stay here,
right.
And year after year, we can see that the number are increasing, and in all of the programs, so including in the bachelor program. So we have young students moving from the US to Europe and to France to study, business. It's the case for the master in management and also at the MBA level. So, it's. I think over the past 2 years, we have increased the number of American students by 25%.
Wow, that's a lot.
In certain regions of the U.S., different business schools are known for different specialties. If we go to Silicon Valley, we'll talk to a lot of Stanford graduates, for example. Here in New York, the Wall Street sort of feeds from NYU and from Columbia. Is there an industry that your business school feeds into?
Finance and asset management. This is, we were talking about that just before. And in a very special way, because we have a kind of good recipe to monetize the results of our research. So we launched a research center in asset management 20 years ago, and the story ended up with EDHEC selling a spin-off in finance for 200 million euros. At the stock exchange of Singapore. So we have to compete with American business schools.
So you practice what you teach.
Yeah, exactly. We have to compete with you guys. And schools here have a lot of resources, huge endowments. We don't reach the same amount, so we have to find other ways to find resources.
That's fascinating. Yeah. And so that helped to finance
definitely the
business
school.
Of education.
Yeah, it goes to the foundation, to the EDHEC Foundation. And thanks to this money, we launched a venture fund for impact startups. We finance a research center on climate finance. And
we see that on a more individual basis in the U.S. You certainly have faculty members from school to school who are experts in management, and they've become coaches and management, gurus. Right. They're doing it individually, and they are benefiting from it. It is not institutional, whereas we're seeing much more something like what Dean Metais is describing over the last 2 decades is ways to fund the schools.
We've got to run. Come back soon. This was really fun. Of course, our Dimitra Kessenides and, of course, Dean Metais of the EDHEC Business School. Thank you.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got about 18 minutes left in today's trading session. You just heard Charlie Pellet and Bill Maloney breaking down the trade for you on this Wednesday. And we're bouncing around near our highs of the session. So that means up about 1.25% on both the S&P 500 and the Dow Jones Industrial Average. A little bit higher on a percentage basis when it comes to the NASDAQ 100. It is up nearly 1.5%, Tim. But a lot of this trade has been on, I think it's safe to say, the rollback of the tariffs against Canada,
you should look at what
Mexico.
automakers are doing. I know it's too late to change your gainers, Carol.
No,
Are they included in your gainers?
I don't think did I not put them on my list?
I don't know.
I didn't put them on my list.
know.
How did I do that?
I wasn't going to say anything, but I just did.
You're usually so good. You're like,
I know. I didn't. It was
hey.
right before we went live. I noticed, and I'm like, I don't want to throw that at her right now.
No, you know what? I put them in the chat before Tesla because initially Tesla wasn't really up on the day and the other automakers were. But all right.
All right, Aaron Kennon's going to help us make sense of this.
We'll
He's
survive.
co-founder and CEO at Clear Harbor Asset Management. More than $1.5 billion in assets under management. Aaron, back with us from Stanford. Aaron, how do you make sense of the uncertainty that we're seeing play out right now? This is like a flashback to the first trumpet term, right?
Well, I think clearly the market's trying to sort out a bunch of uncertainties. One is the tariffs that you just mentioned, and whether or not it's bark or bite or a combination of the two. And, today we saw a little bit of, the scalpel taken out with auto protection on trade but there are also other uncertainties, of course, Ukraine and how that's going to settle out. Inflation or deflation, is China growth back? It was on its heels for a while. They just announced a big stimulus. How about U.S. growth? We've seen interest rates, trend lower over the last several weeks, about 50 basis points since mid-January. I think there's a concern about U.S. growth. And so it certainly doesn't help that the tariff uncertainty leads, I think, investors to reduce their exposures if they're leveraged, reduce leverage. If they're long-only investors, maybe raise a little bit of cash. Today's an exception to the recent trends of the downward slope in the markets, and we welcome that. But that's markets have been technically oversold now for the last couple of days.
Hey, Aaron, do you think that there is a Trump put in the U.S. equity market?
It's a good question, Carol. I think there certainly was one during his first term. He seems more intent on certainly using tariffs as a tool and maybe not as a tool that's necessarily going to be temporary in nature. And that would suggest to me that maybe there's less of a Trump put for Trump 2.0 versus 1.0. But, certainly to the extent that Congress has to be involved in some of this action, there's at least a put there. And my suspicion is that they know that they need to move forward quickly with everything from tariffs to DOGE to fiscal constraint in these initiatives before the midterm elections. And so the next few months will be really critical in that regard.
Does, to sort of follow up on Carol's question, we know that the president looks very closely at financial markets. Is it working as a backstop to his policies?
Well, I think there are a couple of things going on. I mean, I think clearly that the tariff desire that he has will have a tendency to weigh on growth, to reduce profitability on average across the economy. And I think that's the other trend, is that we're seeing less fiscal stimulus here in the U.S., Tim, in Trump 2.0. Not only are we seeing CHIPS Act, Inflation Reduction Act, which was passed under Biden, but the massive stimulus even passed under Trump 1.0 after COVID struck. A lot of that's both waning, and then, of course, through executive fiat, he has cut some of the remaining funding off. And what we're seeing across the pond in Europe is really just the opposite. There's really a strategic or structural shift in Europe that we're seeing, where Europe's realizing they have to defend themselves. Mm-hmm. Germany just announced yesterday they're going to spend 20% of GDP over the next 10 years on defense spending. That could contribute 1% of GDP to that economy, third largest economy in the world. And then the EU's meeting within the next day or so to talk about spending another $500 to $600 billion over the next 3 to 4 years. We haven't seen that type of not just military spending, but deficit spending in Europe in our lifetimes. And so there is a liquidity shift, I believe, afoot. And we're seeing that with European equities up in the teens this year, about 13%. And of course, the U.S. is sort of a different story, with S&P still down year to date. Equal weight S&P is up a little bit. Mag 7's on its heels, actually weighing down the U.S. market rather than lifting it as we saw the last 2 years.
I so love that you went there, because we really haven't had a lot of time to spend on the story that came out of Germany overnight. And you're right, Aaron, the DAX was up almost 3.4%. Tim and I have spent a lot of time this year, though, talking about the outperformance of markets outside the United States. As you mentioned, Europe, the Euro Stoxx 50 is up about 12%. The CAC 40 is up 11%. The DAX is up, it looks like, about 16% year to date. This outperformance that we are seeing overseas, that liquidity shift, is there something that could happen in the United States that affects that liquidity shift that you're talking about that may be going outside the U.S.? The U.S. Commerce Secretary, Howard Lutnick, earlier on Bloomberg, talking about the policies of the United States being ultimately good for the U.S. stock market, good for the U.S. bond market. How do you see it longer term?
I think there is I do believe in American exceptionalism from a regulatory standpoint, from an ingenuity perspective. We have a high allocation of technology in our indices. And so in that regard, I think the liquidity will ebb and flow here, but always sort of want to flow rather than ebb. The challenge is valuation in the United States relative to the rest of the world right now. And I think that's where some of those liquidity concerns arise. And of course, tariffs don't help. And to the extent that there's a resolution to the war in Ukraine, and in a way that is provides a level of fairness to Ukraine and to Europe, that could put a halt on the margin to this sort of trend that I'm talking about, which is massive military spending in Europe. And then, looking further across the pond to China, you have a lot of fiscal stimulus that was just announced there recently as well, spending up to 10% of deficit to GDP, right, to try to create 5% of growth. So there's opportunity in that part of the world as well.
Yeah, it's getting interesting around the globe all of a sudden. Aaron, thank you. Good to check in with you. Aaron Kennon, co-founder, chief executive officer of Clear Harbor Asset Management. They've got over $1.5 billion in assets under management. Aaron joining us once again from Stamford, Connecticut.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.